So oil prices falling slightly yesterday. Traders returned focus to rising US and EU crude inventories. Overall crude prices still higher this week due to better optimism from the global economic perspective, dampened a little bit by the JPM CEO Jamie Dimon, who said the Fed Reserve could well raise interest rates above the 5% mark pretty soon. What impact has that had on a barrel? 84.17, down about a third of 1% in the last 24 hours. That's your Brent crude price. Natural gas, the only one of the commodities in the green this morning, rising to 245, a smidge up at 0.70.
Middle East Energy, guiding you through the energy transition.
Where we are talking energy, delighted to be joined in the studio now by Maryam Salman, consultant with Qamar Energy here in the Middle East. Maryam, good to have you with us. Thank you very much indeed. Let's talk about earnings of energy companies. Let's talk about the big ones overseas, the Exxons and the BPs of this world. Record profits for many of them, but also a lot of outrage about that. Joe Biden, in his State of the Union speech, singled out ExxonMobil and said the fact that they've made hundreds of billions of dollars is outrageous. What do you make of this?
Well, we should be looking at the record earnings of these international oil majors in the wider energy context. Of course, we know that energy markets have been upended in 2022, and the focus has returned to energy security, which has become a prime driver for a number of these players. How do they meet global oil supply? How do they make sure that energy demands are being consistently met? And in that aspect, majors like BP, Exxon, or even Shell, they've had the pleasure of leveraging a number of overseas assets for higher prices to earn a lot of revenue for the fiscal year 2022. And what this actually indicates is that even though there are a number of decarbonization plans that these majors have, there's a growing outrage, as you rightly say, by environmentalists, even by Joe Biden. We know Greenpeace is outraged at BP's record earnings. It might not necessarily mean that they are sort of moving away from the decarbonization angle itself, but because shareholders seem more willing to reward oil and gas activity to meet energy security, which is being underpinned as sort of the stepping stone to the future energy transformation, this might rub some of the environmentalists the wrong way. How can we actually meet the energy transition if we are allowing the oil and gas majors to accrue so many revenues? But on the flip side, you could argue that to actually realize the energy transition, you would require those revenues from higher upstream oil and gas earnings to go into these businesses' decarbonization plans to actually realize them.
We don't have as much visibility on the oil or energy companies here in the Middle East. We have some. Aramco, of course, is a listed company now. We haven't had their full year earnings. They will be coming in the next couple of days. The only one we've heard from in the UAE that I can see is ADNOC Distribution. And that's more of a retailer, really, rather than an oil company. But what do we know about what's happening here?
I think a number of the national oil companies are now increasingly looking at their distribution arms to sort of reduce their overall scope emissions. And one important factor to take into consideration is that the distribution or the retail fuel arm can play an important role in the decarbonization of the transport sector. They could encourage the uptake of EV charging stations. They could provide e-fuels or synthetic fuels in their infrastructure. And by doing so, as I mentioned in my last point about BP's and Exxon's earning record revenues, the parent company earning higher net earnings, a portion of that can also be directed to the decarbonization from the arm that is responsible for distribution. So while they can hold on to their exports to meet energy security, so to say, for the time being in the near to medium term, as it is a critical aspect right now, we can see that the distribution and retail arms can undertake these measures sort of to drive forward efficiency and energy transition gains through EV charging infrastructure, synthetic fuels, biofuels, etc.
Let's talk oil, if we can, Maryam. It's been an interesting week for oil. Week started really well, 5% bounce because of, well, some analysts suggesting China demand optimism there. That slowed a little bit midweek and coming down a good percentage point yesterday as well. How do you read the oil price numbers? Where are we at this morning? Currently sitting pretty, Brent crude at 84.18. So, yeah, down from a start. Still optimistic to a certain degree, but your reading of those numbers this week?
I would say that there will be some continued uncertainty this week and for the remainder of the month. We know that China has now removed its zero-COVID strategy, and in the anticipation of that, a number of leading organizations had predicted that demand would spike, and coupled with the OPEC plus cuts that are currently underway, it would send prices skyrocketing to the triple digits again. But I think we should take into account that there has been a fallout from the zero COVID strategy. Industrials and manufacturing are just beginning to pick up pace in China. They have been more slow moving than expected. There is sort of a heightened caution amongst people themselves to continue taking as many precautions as possible. And if we look at neighboring countries like Japan, they are considering removing their COVID restrictions, travel restrictions for Chinese travelers. And this in itself has not lent any solid support to the aviation sector over there, which is, as you know, a major consumer for global fuel. In that aspect, I think the fallout from the zero COVID strategy, the strict lockdowns that were in place up till now, and the uncertainty around the removal of these travel restrictions will continue to weigh on economic sentiment for at least the foreseeable 1 month.
Okay. Can we talk about India? Because it was India Energy Week over the past few days, and we had some big speakers. You had Sultan Al Jaber, who is, among other things, the CEO of Abu Dhabi National Oil Company. He was there. Of course, you had senior figures from India as well. You had the oil minister speaking there as well, Hardeep Singh Puri. He says, I continue to maintain that the Gulf, the countries of the Gulf, will continue to be major suppliers and account for a large percentage of our oil imports for a long time to come. What did you make of those comments?
Yes, I can see why India would consider its relationship with the Gulf and the Middle East producers as paramount to long-term security of supply for the country. What's actually happened in the last year is that India has become the ground for competition amongst a number of suppliers because Russian crude has been taken up by India at record discount prices. And Russia will continue to provide these discounted barrels because, as far as it is concerned, it has no problem really, in principle, selling its oil at $45 a barrel. The Urals is trading at $50 a barrel currently, and this is way below the oil price cap set by the EU and G7. So as long as India, or by extension China, can negotiate a discount on these barrels of oil, they will continue to do so. This sort of fits neatly into the EU G7 strategy. They wanted that Russian revenues are substantially reduced so that it does not fund the government of Vladimir Putin. But what happens is that Russia can undercut GCC suppliers on price, and it can so threaten the GCC suppliers' market share in India and in other countries. Now, if the EU G7 were to apply, say, secondary sanctions on countries importing Russian oil who do not abide by the Russian oil price cap, then India would probably shy away, as in the case with sanctions against Iran. So I would say this is sort of a temporary wait and watch kind of situation, or watch and wait, whichever way you want to see it. How does the political situation on the global scene unfold? And if sanctions are applied, secondary sanctions are applied on importers of Russian oil, and if the price cap on Russian oil ultimately fails, then would India still continue taking in Russian oil or prefer the more stable and reliable supplies from the GCC?
Maryam, appreciate your time this morning. Thanks for joining us. Maryam Salman, consultant with Qamar Energy, joining us in the studio. Thank you.
Dubai Eye 103.8.
Join the conversation.